Okay. All right. All right. Welcome to Sauce Factory Wednesdays. All right. With the cheat code algo. All right. What we have here today is the cheat code algo. This is the algo that we offer here. As you see, this is what's loaded up on my chart. And right now we're currently on Walmart Daily. All right. I like to go over some features, right? Typically, we already know we come with the buy and sell signals, but a lot of times people don't know how to properly use the tools that's offered to you at your disposal. Now, I know a lot of people don't have issues getting in the trades, but when you in the trades, you have issues managing them correctly, knowing your targets, knowing your entries, knowing your exits. But primarily, it's the knowing your exits when the game is over, right? And there's a couple of things on the chart that you typically miss that will tell you, like, hey, the jig is up, time to exit. It's time for me to switch positions and go a different direction. All right. And I'm about to show you a couple of those little tricks that you can, help you identify that, like different candlestick patterns, chart patterns that will show you, like, hey, this is where I need to be targeting at. If I get into this range, this is why I need to exit, using XYZ signals to show this is it, right? So as you look at it, Walmart on the daily, I just happen to know about this chart because one of my friends hit me up saying, hey, I'm in this trade. I don't know where it's fully going to go. Where should I get out at? I say, no problem. Let me look at the chart. All right. So we started off with a buy signal on December the 18th. All right. Boom. Buy signal came in on the daily. Price went up. All right. So currently, from that Monday to today, we had a $2.74 move. And I told him, I said, well, I said, price is going up. But I looked to my left and what did I see? I said, okay, do we have it? I set a paired orders, right? Or what I like to call rejection blocks. Did you use the smart money concepts? You know these as rejection blocks. Anytime you see an order like this, let's zoom in. All right, let's get up close and personal. Let's hide out of the stuff. Let's get straight to the chart. All right, so you had an engulfing candle followed by an additional engulfing candle of the opposite color, right? So this is a bullish candle got taken out by a bearish candle. If you wonder why my candles are purple, this is called a blue scale inside the cheat code algo. It reads with the RSI. So I changed my candles' color because it's going with the RSI. All right. So once you have these two set of candles, right? Boom and boom. One strong bullish candle followed by a very strong bearish candle. That's signifying a nice downtrend is about to begin, uptrend is over. Now, what typically happens is price will go down to a certain point and then retrace back into this said zone. And a lot of times it will like to reverse. It will get up to a certain XYZ point, and then from there it will reverse. So what I advised him was, because he's not financial advice. I'm not a fiduciary or financial advisor. Brother with a game and a laptop. All right. So what I told him was, I said, hey, you might want to put on a stop loss. I said, you don't have to exit, just put on a stop loss because it can keep going, but I will recommend a stop loss. So put a stop loss in profit and you're good. Because 9 out of 10, what happens is price get in this zone here. And it likes to reverse. Okay. If you want to know how much of a reversal, how strong of a trend it is, you can just grab your Fibonacci level, right now down. Right now, Walmart made a 88% retracement of this set trend. So we're gonna go down to a lower time frame, like a 1 hour chart, and then we're gonna see what's happened. Right? Once price got back into the zone, you see it start playing around, falling around, and I'm like, okay, it's already at a high. Is having difficult get over this level. I said it could break down, it could not. So that's the reason why we like to use stop losses. A simple stop loss can either lock in profit or keeping you from having a very bad day because if it decide to reverse at any point in time, you can lose everything versus just a little bit of additional money, right? So you can still stay in the trade as long as it don't break down. Now, let's say what qualifies a breakdown. If you're trailing this and you went up as you stayed through all of this, or you just happen to get in here on this buy signal, your stop loss is here, right? I'm gonna turn that red. And we're gonna be fancy with this. We want to add some lettering. At white. Change it. Stop. There you go. Right. So this is your stop. This is the if you just happen to get in here, or you was already in over here and you just happen to stay through this pullback, whatever just happen to get in. But this is the last swing low. Okay, fresh buy signal, last swing low on a 1 hour. Your stop loss needs at least minimum be here if you're following the price action up. Now, once price action goes up, make a new high, and it made a retracement here. It went from point A to point B. Now this is C, right? Your stop loss need to go to the bottom of this low here. Okay, bottom of this low. The great thing about the algo, you see how I put in this sell signal right over here, but it did not last long whatsoever because it was truly in a uptrend. Now, the sell signal here was signifying like, hey, you can either take profit now, or you can just wait. It's going into a pullback, wait for it to find support, which it did, and then from there, a new buy signal came in, stronger push up for the last round, right? And you had the BOS, stand for break of structure, letting you know like, hey, it's shifting back to the upside. Now, once this shift comes in and you have another base of support, you simply put your stop there and you let price go. If price takes out this low, guess what? That's a change of character and the trade is over. Okay, you don't want to be sitting in here hoping that it comes back up. If it takes this low out, right? If it takes that low, we'll say price did this, right? Boom, boom, came up, and then it done this. You didn't even have to do all of that. Let's say it came down this way. From that point on, you should clearly know it did not respect this last low here. It clearly took it out. That's violation. Game over. You need to be out to trade. Waiting around anything longer than this is a recipe for disaster. Okay? If you're taking out significant lows, it's a high likelihood that, hey, you're in trouble. And that you're already trailing up, you don't want to be giving up that much profits to figure out, like, is this the right trade for me? Right? Or to say, hey, do I need to be sitting here any longer? Now, over here, when everything went off on a 1 hour chart, right? You got to change a character or change structure here. And you're like, huh, why did that happen, right? Why did it shift down? This time it actually took out the low, but it actually went up higher. Well, there's a reason for that to happen. It had to rebalance price over here, right? One, you had a nice little order block. Oh, this was a bullish order block right here. Okay. Then two, you also had a fair value gap here to here. So you had two reasons why price wanted to go up. Fair value gap, order block. That's a strong bullish reversal. Price went up, price came down, rebalanced price in the gap, and then went off. Okay. It actually came back for a retest, but definitely went off. So that was your entry. Was a fair value gap. You see price running, don't worry. You simply wait for your opportunities and you get them. It's always going to give you the opportunity. So you say, huh, it took out the low, but where's price going? Recognize where price is going and get in on that. Be sitting there waiting with your order. Say, huh, I see a gap here. I got an order block here. Well, I'm going to be looking for my entries at the top of this line level here. They'll be 153.92, right? So I'll be looking to say, all right, cool. if I don't want to miss the move, I'm going to be looking for my first entry here. Now, if it happened to go down to here, that's great. I can get a bigger discount. Now, I would like for it to come down this low because that means price is going to be severely discounted, right? If prices stay here, that's cool. That's a good discount, but I like an extreme discount. I'm cheap. So I like to get it for the low, because once this candle comes in, a lot of people do not believe in the move no more. They lose faith. They lose hope. They get out the way. From there, price drops. Boom. Then reverse. What was the signal for the reverse? This nice little boosie candle right here. All right, this caution candle, indicator combination, we call it the boosie candle because it really set it off, okay? It set it off. That's exactly what happened. That boosie candle came in, whoop, kind of got a little aggressive, so they had to rebalance price. You never want to get in on the aggressive candles, wait for a pullback, because I guarantee you they're going to have to come back, rebalance this price, which they did. They said, we all good here, and let's go off. They got out of sight. So that's what you want to pay attention to. Other signs, right? Look at the consolidation. You have this Walmart chart on 1 hour is a great example, right? So this is what price did. Boom, price went up, price came down, right? And price went sideways. Then price shifted up. Okay? Pay attention to this. Get out of there. All right. So once you see price shift down like this and then it start consolidating inside of a range, you can put a box around this, whatever you have to do. Just know, hey, price is about to explode in one or two directions here, right? Do not get fooled by this. Once you see price drop drastically and then the next candle with no follow through, pay attention to that, right? So here's our little consolidation zone. Here, let us widen this out. But this is what you want to pay attention to. Let's zoom in. You cannot have an engulfing candle like this with no follow through. That is an issue, right? This candle has 0 to no follow through. This is an indecisive candle followed by another indecisive candle, indecisive, 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 indecisive. Okay. What they're doing is they wicking the market backwards and forward, trying to get people to get out of positions while they add to positions, right? All the sellers who went short here, they jumped in the market with no plan. They jumped in on this aggressive candle here because it went down for 1 hour. They probably took it on a 15-minute chart saying, oh, this is a great trade. I'm going to go ahead and short Walmart. This is a great, 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 right? So you was making money and then it went sideways. Then it went sideways some more. Then they popped it up to scare some people out. Well, guess what? Then they dropped it again. Now the people who went short somewhere in this bad spot in this big caution candle here, right? Actually, it was a boosie candle too. When they went short and they seen price go up and come back down, guess what? They doubled down on their position. They said, man, this is the market really going to drop now. I'm going to have to add more to my puts. They doubled down. They kept the market going sideways. You've seen a little bit of more progress, but your contract already ate up. And they really toying with your position here. This candle opened here, went down like it was going to go lower, but it did not. That's where it stopped at. You know what I'm saying? Can't even tell nothing. Bing. This game is here all day long. But they played with you. They dropped it down, whoop, took it right back up, closed here, right? Then they said, oh, we're going to take it bearish again. Playing games, playing games, playing games. While the whole entire time, their goal was to build the position to the upside. But they cannot have you in on a fund, so they got to trick you into not getting in the right direction. They want to get you to get overzealous on one side, get over biased. You buy more short positions instead of looking for the long positions because it clearly cannot break out of this range. If you would have got one long position and they're set with some time on it, it's like, okay, let's see what's going to happen. And when that move happened, boom, you in there. Long haul, right? But games like that is what you want to pay attention to. What happens after a candle like this? What are they doing? Is they consolidating? Okay, great. They consolidating. Now I need to start backing out, seeing what's happening with my oscillators, where the market at, what was the higher time frame shifting like, and when did the market comes to a standstill here because this is odd. A large candle like this should be followed by another large candle, or at least the candle after that should be followed by another large candle. If there are no follow through, the trend is over. I need to be waiting. Like, look here, boom, large candle, indecisive candle followed by another large candle, three order block continuation pattern, right? But it was followed through. You don't get no follow through off of an engulfing candle like this size here is quite odd. You want to worry if you start seeing a lot of consolidation and it's not breaking. Well, you have a better chance of going long than you would have going short. Why? It already discounted. Now the contracts to the downside are super juiced, and you're betting against the wrong side. If everybody see the play, is it still worth the play? A great example was when a news article dropped about Nancy Pelosi and her husband buying those Nvidia calls, right? Everybody like, oh man, he buying these calls. They dropped it on a Friday. Everybody wanted to go long on Nvidia after that, right? Everybody was looking for it. They thought it was something great to slice bread. But you go actually go read the articles, you'll find out they've been exited that, or they've been executed that position. They already got the calls, been executed, contract expired, they already got the shares. So now you're front running they project. They dropped the news late enough where you couldn't do nothing about it and you couldn't even enjoy it. So once they already had a position on, they dropped this news, everybody jumped on a bandwagon and pushed price up. You allowed them to actually get their money back off that slight push up. And then guess what? They took profits. Other traders learned to exit. So when it happened, let's go over to the menu. When it happened, you got to look at it like this. What is the intelligent move here? If everybody going to be looking to go long, I need to be looking to go short. Feel me? Let's go. Ooh, ooh, ooh. Hold on. Let's get on in and get over here, right? Boom. That was that. All right, so this was Friday, right? 22nd. Look what the market did. It shifted down. Then they see, oh, I want to shift up again. But look, it's no volume. Nobody else took the bait. So the retail traders took the bait, but the institutional traders know, hey, start liquidating. You see candles like this, that means people are taking profits. They just can't take it rapidly because they don't this. But this is when they actually executed their position way over here on the 20th. They was already done, full position played. They are done. Y'all just added to their premium. I actually picked it up. So the people who actually went long thinking they trading with the Pelosi's, you picked the stock up, they already got out, took some profits. Game on. That's how it goes. So a lot of times you cannot be a sheep, you need to be a sheep herder. You see where things are going, you take news and you look at it like this. If everybody think it's gonna do this, what is not gonna do? Let me look at it from the other side. If I see everybody running in this direction because everybody told me this is a great idea, well, I need to be a self-thinker. Well, what happens when they get there? Then what? I think I need to go this direction. So when everybody say go right, I think I need to go left. And when I go left, I'm early. I just need to simply do a 180, opposite direction from the crowd, and plan accordingly. This is the reason why we plan here, right? When you see what the market is doing, you say, okay, cool, market is running up. Where is it going to go? This is the last high. Who think it's going to go higher? I don't. So guess what? We at a high, price is struggling. Let me get a short position. right? Or you see this engulfing candle. Everybody think the Pelosi is going to be picking them price up. You trading with the Pelosi's, but other traders going to see this and they're going to say, pullback, I'm going short again. If they can't beat this engulfing candle and you got weak price action, I don't believe they're going to make it. So let's go up to the daily chart. Let's look at it, right? The sell signal came in over here. You got a buy signal signify what? A pullback. Until they can beat that high, technically it's nothing but a pullback. Okay. So this is our support slash resistance. Bada boom, bada bing. Drag it down. You got to pretty much have a double top. Now, if they're pulling back, and then as soon as they got there, you had a candle like this. Now they're trying to pull back in. If they can't beat this, man, do you think they still going long just because the Pelosi's picked up some shares? But look at how much they paid for these shares. They paid $820 per share. With people with money, they can buy the shares at a screen discount anytime they like. They simply pay a little bit extra, but they get that back in equity. Yes, it is. You definitely want to go long term on it, and so do they. But how do you go long term when everybody wants it? Well, that's what the genius of options are, right? The option contract is nothing but an agreement to buy shares at a certain price. If you have the necessary capital and you're well capitalized, you can go buy any stock you want at whatever price you want. And you'll say, well, why do I want to pay all that in premium? Well, the Pelosi's don't have to wait. They got $5 million lined. I want to get NVIDIA at a screen discount. I got to wait until the market turns, go into a bear market or some type of market crash to get these great deals. When you have the necessary capital, you make deals. I'm gonna spend 40,000 a contract. I can get Nvidia $120 a share. I'm gonna pick up a couple of thousand shares, tax write off here. I got the premium on that. So when you buy those contracts at $120 a share, even though you paid the current premium for them, you bought equity. It's like buying real estate, but in the stock market. You can do this. You can, the same concept of buying real estate and you get the equity because of appreciation. Same thing with these stocks. You can go get the contract deep in the money, pay for it, and that will automatically have built-in equity in those shares once you execute that said contract that's deep in the money because price went past that said uh, level. So they offer, let's say you got the contract at 150. You want the 150s, look at price. 140, 494, right? Guess what? You can say, I'm not sure if it's gonna go up, but just in case, I still want this 450 price. I just don't want to jump in right now. So what I'm gonna do is I'm gonna buy the 450 strike, and then from there let things transpire. Blah blah. Guess what? I'm gonna execute, but I paid an additional $100, so I paid $100 on top just to get the access to the contract, and then after that, I'm gonna pay 450 a share, and my share is gonna be worth 494 the moment I attain those said shares. That is called wealth planning. You have the capital, you put it to use. Always put the capital to use, right? Now, let's go to target. Set up. Get off of it. There we go. Right now, I'm just kind of going over some. I know we're going over stocks. We cover our market. These technicals work in all markets, right? This FY just letting you know. But these was some charts I just happened to look at. Some people had me ask me to go over them, and I just noticed some great things I want to speak about today. So, all right, boom, target. Here we go. Once again, it was at a high. So when I initially looked at target, I said, hey, what do we have here? Had this initial high, this is price going. I'm like, all right, cool. What's to the left? All is imbalanced price, right? So I'm like, well, target want to keep going up. Any moment it can reject in this area. I'm like, well, this is a decent target here, but I'm also looking at this volume imbalance right here. And we already at the top here. It made a sharp recovery, right? Anytime something get rejected and it makes a V-shaped recovery, a downtrend is to occur because I'm not confident that Target will actually make it up like that. Anytime something make a quick bounce back, that typically lead to a double top or a double bottom pattern. It goes boop boop very quickly. That sharp V that always comes to a topping pattern or a bottom pattern. All right, let's go down to the 1 hour. Now this was another trade. I was like, okay, I said, man, it's at this level, is at a high, and it's puttering. I said, man, take profits. That's what I told him. It was one of my friends. I hit me. I said, yo, he ain't an active trader. So I'm like, okay, great. He a passive trader. I said, look, it's topping out here. Do it have more? Possibly. Do you want to risk? No. I say, man, you go ahead, take profit, have a great day, and go on about your business. Listen, he had a great day. As you see, what Target did, it puttered out and it slowly started to drift back down, right? It had whatever Target wanted to reach, it reached it, took out that little buy side liquidity. Now it's one of this gone ahead, putter out and drop. Now, if you actually in an option position, guess what? This is bad business for you because you no longer have progress. When you do not have progress, guess what happens? The market will fall, and your contract will go to trash, right? Or if the market don't fall, your contract is still going to trash sauce. Okay, so you will always want to be mindful of that when you're looking at these positions and you're getting up to highs and you're not taking account of where you located at the price. You took out a high, you approached the high with force, but guess what? The next candle had no follow through. And that's what I'm talking about here, right? That's what I was talking about earlier. You had no follow through. And then look what price stopped at. Right there, that was your high. Boom. Then after that, price is slowly drifting off. Could you stay in it? Could. But are you making progress? No. What's happening to your contracts? It's losing value. Every candle is losing more value. It's becoming more and more worthless. So you was in this trade of this said buy signal here, and you played it up to here. Your target should have been the high. Always target the last swing high. So initially, when you seen that, you done your technicals and you plan this out, you're gonna say, hey, that's the last high. This is my target. Boom. Enter on the pullback. Wait for it. Here's your pullback. Buy signal came here at 10:30 on Thursday, the 21st. Boom. Pullback. That was your entry. Bounce support. Let's go. Why? Because you had this nice little gap again, right? Nice little volume imbalance. They want to come holler at, put a candle there. They only wanted to put a candle there, right? So let's talk about it. Let's get in here. Y'all may not pay attention to this, or y'all may not think nothing of it, right? Actually, it goes up this high. So you see that? See how these wicks, this candle is lonely, nice and lonely. Boom, boom, boom. Ain't nothing next there, right? You got all this wick, all this wick. It's a void. Let's call it volume imbalance. These three candles formed that, right? So you got a wick, candle, nobody right there, body up here, number of wicks and wicks. It's a void. They're gonna want to get a candle close. That's what they did immediately. Engulfing candle down. Boom. Next candle came a little bit deeper to line up with this one. Look at my crosshairs, right? See how where they lining up at? Almost dead even with this one. That sufficed the void there, and then it was able to go off. These are things you want to pay attention to. Well, technically, this is Target, so they don't have an overnight. It's this is only traded, during in New York. So you got pre-market with people selling shares, and then from there you'll have the whatchamacallit. And you got post-market, pre-market, right? But here is nothing but when an extreme push. This is nothing but an extreme push here, right? If you look at it, it was a bullish candle, but the sellers came in last minute, pushed price down right here. This can happen while the market is going on too. So this happened during New York. If you look at it, right? It's closed to start a day. Candle open here, came down here, and they pushed it back. Okay, open the candle bottom open because it was a bullish candle. Came down first, then pushed up here, and closed here. Same thing with this candle. Open here, went down, then up, then closed. It fills the void. Yes. So from here to here, this is the void, right? It's actually, you count this area too, but that's where a body was at, but you really want to pay attention to the wick. So sometimes you can have, like here, technically, situation here. Let's cut this on the back test. So that same thing here, right? They had a fair value gap on this one. Great. What they do, they overcompensated with this candle. Came up, bam. What they also do, they filled two issues at the same time. They had a gap here, right? They had a simple gap. Took that out. Then from there, they also had this imbalanced candle here, which is fair value gap. They also took care of both of those at the exact same time. But in the process of an extreme price move by the institutional investors, guess what? They left a void behind. So what they had to do was come back forward, which is also a great tactic to shake people out of position. Anytime you see this, you don't want to jump in this. Now let's actually put this on rewind, and then we're going to go back and see how this played out on a lower time frame. And you'll see like, okay, where did they had you messed up that, right? Let's go down. Let's say price opening up. It's opening the day. Let's get down to that 3-minute chart. Let's keep busy with it, right? Boom. Close the day. Gap up. Okay, great. Then it came down. Well, let's say a gap. Then it ran up. Take care of that gap over here, right? Boom. And that gap. And after that, remember, engulfing candle, little to no follow through, followed by what? Boosie candle. Said I was out of there. Anytime you get little to no follow through by an engulfing candle, the following candle means the trend is possibly over, right? And then what I tell y'all about those 3 candlestick order block continuations. Boom. You get spicy with this, right? What price do? Came back up to retest, reject, but they was playing around because they was on a mission. Right? They had a mission to go. See, imbalance price here, but what happened? They got up in the zone, a little bit higher, but eventually they dropped. They don't play about these order block continuations. They wanted to reject the first time, they had to get up a little bit higher because you had imbalance price right here now. Right? So once they squared away with these guys here, by taking it up to this point, boom, they created a new imbalance here to here. Also, you had an order block, imbalance for value gap, right? What they touching. Let's get rid of this box. That box. See what I'm saying? So they be on a mission. You understand where they're going, then you can understand where they're going to or coming from. Where they came from, you can see where they're going, right? So once you've seen this happen, most people like, oh man, I got to jump in this. No, you don't. Be patient. Wait for your setups. If you wait for the setups, you can get prime opportunities by simply saying, okay, if I missed this drop here, if I didn't get in on this said candle, right? So you say, man, these order block continuations. Right? The entry is the break of this wick, stop loss, top of it. Once it goes off, you probably got 1, 2, 3 candles. Sometimes less. But there's no for sure they're going to come back to retest the zone. What they also left behind was a fair value gap. Okay, great. So if they come back and retest the zone, you say, man, this thing that it's not going to hold, or retest or order block did not hold. Well, guess what? You understand that, hey, it's still an imbalance above me that they could be going for. So don't worry. Just simply cut quickly and then see what happens when it gets to the next level, or hold tight. If it gets past this candle here, then I know for sure it's time to go. That candle is your new stop if it get past this candle, right? So let's say you was holding here. Let's say, let's do it like this. Boom, you enter there. You seen it coming back for retest. Now here's your entry. Okay, great. Instead of it's doing that, it goes up a little higher. Okay, cool. If it does that and you don't get your instant rejection, right? Let's say this was the ring. Now let's say if it does that, SOS, right? Boom, here's our rejection. Got in here, and then it kept going. Right? Turn down red. If it kept going, why are you still in the trade? If you thought it was a reversal, it did not reverse. It kept going. Why are you still there? It had no business taking this candle. This is your stop loss. Your stop loss is structure. If you couldn't hold here, and it definitely ain't holding here, you need to be out of dodge. Get out the way. Do not hold the trade. Understand, when structure is broken, you are broke. Get out of there. Right? We don't hold, we don't hope. Get out of there. That's point blank period. Same thing you just happen to say, oh man, this thing found support. Let's flip the script on this, right? Let's get out of this, get all this out of it. Let's say you're still holding loans, because some people do. Some people keep holding loans. They seen the play here. They got in. Boom. Run it up for the gap. Boom. Oh man, this number to pull back. Look, I was right. I told you I was right. And then this happened. Happens every day. You was long here. You fell asleep here. And they took your money here. See what happened? Let's speak about it. Okay, let's lit. Oh, lit. It's price here. Now, same high, right? Because that was a resistance. Boom. This was our target, but we said, nah, man, don't worry about that, man. With good times, we're gonna keep rolling. Boom. Pull back. Boom. All right. Good. Boom. See this when you get your confidence back? Yeah, you thinking, big dog status, right? You got your confidence back. You say, oh man, it'll just, man, I told you it was just a pullback. Boom. Mm-hmm. And this is where you crying in the car because you had price left up. Okay. See how that works? It's exactly how the emotions go. We lit. It's just a pullback. I told y'all should have believed. Diamond hands, target to the moon. We up there, crying in the car, wishing you had a stop loss, wishing you took profits, wishing you would have got out way over here. That's not it. Now, let's talk about the fib then. Let's run a fib on, right? Let's run a fib from the bottom to the top, right? Boom. Made a 61, 65% retracement, and then it went up. But it did not get past the 23. 23 holding as resistance. Fibs are support and resistance levels through certain calculations, right? If it cannot get past that, well, guess what? Remember, you had a sell signal up here. This buy signal is actually signaling a pullback. It was no longer saying, hey, we lit. It's a pullback. If you got a buy signal and you still down here inside of sell structure setups, because this is a shift, change of character, right? This is a sell now. Look at that. You got to get way up there for me to say, all right, we bullish. Yeah, that was a deep retracement, and you're struggling. You got problems, Jack. Then sell signal come back in. Don't hope. Right? So let's say let's flip it.
Can you actually do it to the lower, to the bottom of that candle, to the little bit to the left?
We go here.
No, not that one. Right where it opened. I feel like it hit the 50 mark.
If you go from this level to here, that's a 50, right? But same time, remember, these are numbers supporting resistance no matter where it hit it. If it hits here and it cannot get past here, that means it's resistance now. No matter where the fib it land on, doesn't matter. These numbers support.
Got it.
Right? So when it goes to certain fields, we get certain data from it. So 61% retracement, a 50% retracement. All right, cool. Price is 50%, 60% off. But if it do not continue in that said direction and is struggling, well, guess what? We have a problem here. We are not going to get oversold on one direction, say, hey, we want to stay going long just because it made a 50% retracement and bounce. No, it needs to make progress. After it bounced, I want to see it get past the zero line, past 139.48, and keep going to my negative 27, then we good. But if it starts struggling at the 23, guess what? We got a problem, right? So your 23 ain't Jordan, it's a LeBron, it's flopping. So yeah, that's what you want to pay attention to.
Flopping.
Yes. It's flopping.
Yeah,
But,
so you know what I would have done? I would have did a swing high to them to swing low. As soon as they hit that mark at the 50 mark, swing that and then see where that next pivot point was to see, okay, could it not go above the 50 mark? If it doesn't go to the 50 mark, it's going straight back down.
You don't even have to move it. It's gonna give you the same information, right?
Yeah, exactly. Yep, you got it.
So you have this large engulfing candle here. If it cannot get there, and you're looking at the candlesticks, right? You see how weak they are? All that was unnecessary movement. You would just look here, sit still, and you would see it's breaking down, it's turning into trash. It's over. These shifts happen every single day, and most people catch them, some people don't. And what happens, you may get oversold into this direction, and you say, okay, we good, we good, we good. And you get wiped out because it already shifted and you did not recognize the shift, or you didn't want to accept the shift. Some people see this happening in their face every single day, but they do not want to accept it. And that's the main key, is accepting that, hey, the trade I was in was a great trade. It's over. I should have took profits. I should have had some type of risk management in place. I should never gave back all that price. Now, let's wipe all this out and let's talk about like where you actually should have been at with your stop loss. Now we're going into our risk management, right? It's your trailing price, and you see you get a nice little up move like this. Right? Got a nice little up move. Oh. From there, after every engulfing candle, your stop loss needs to be there. If this is a scalp, swing trade, day trade, bottom of every candle, right? Boom. They have no business. Price should not take out the bottom of the candle in a strong trend. If it takes out the bottom of the previous candle, that's a problem. It can come close to the previous candle, but it should not take out the previous candle. So you can be like, all right, I'm right below this candle. Cool. Boom. Right below this candle. Notice price ain't never coming back, right? That's how market structure go. Oh, cool. Period candle. The moment this candle closed, okay, great. My stop loss go here now. Candle closed, this candle open. All right, I'm out the trade. Trade over. Simple as that. If you did not want to get that exit, you can say, man, stop loss here. I'm good. I want to see how far to go. You should be out. You should not be waiting for price to come way down here to take you out when you can be trailing from bottoms of candles, especially if it's make a parabolic move like this. Yes, it's apply to swings. It's an easier way to manage your trades. It's the same. If I go to a larger time frame chart, it's a SOS, right? You want to go to previous bottom. So let's go to a 1 hour. It shouldn't take out the bottom of the previous candle. If not, you got problems, right? Look at it. See how I made a parabolic move here, hour after hour after hour. The stop loss need to be previous candle. You can put it at the previous candle or market structure. When you first start, you want to start off in market structure. Once you start getting progress, you want to move your stop loss into profit, where you can say, hey, I'm moving stop loss and profit, but I'm gonna set an alert here. Okay, I'm having an alert here. I'm gonna have my stop here at the previous candle low. We're making progress. Great. Boom. Next hour opens up. Moving stop loss. I get a gap. Now I'm going to get more aggressive because guess what? The next day, the market opens up and you get aggressive. I don't like aggressive openings, so I'm going to trail my profits a little bit tighter. Anytime I get an aggressive move in price, I want to trail a little bit tighter because typically what happens, a pullback going to come. So why give up those initial profits if I can just simply get out at a decent spot? I can always get back in. So same thing here. Boom, next hour opens up. You still good. Next hour closes, open up, boom. This is your new low. Once this candle closed, that's your new stop. Guess what? After that, you out the trade. Look what happened. Price never returned back to the high. It made a shift. Came back up, shifted again, right? It's shifting downwards on a higher time frame. So we went from here, boom, 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 boom. That's what price did. So why give up all these profits if you can simply trail to the previous candle low, follow the market structure, especially when you get in a parabolic move like this. You just want to follow it like that. Oh, keep it tight, low risk, manage your trade. It's easy to get in. It's hard to know when to get out. And that's a typical problem with most traders not getting out at the proper time. A lot of you traders here are great traders. Just bad management of the trade. We all suffered from it. Everybody do it. It happens to the best of us. It happens to everybody, right? But managing trades correctly is the key to long-term success and sustainability. Is this management of trades? If you back out to any time frame, you can do the simple same concept, or you can say, hey, I'm in this trade, stop loss here, I'm gonna ride it down, boom. Okay, great. Price went down to my level, had a pullback. All right, great. I'm not shaking that. Stop loss here now. Once his pullback came in, great. My new stop loss is here. Now let price drop again. Price came back up. Price did not hit my stop loss because that's structure now, right? That's if you don't want to play it tight. You want to play it loose because you have ideas of a longer trade. So this, hey, play it loosely, right? How you stop loss up here at structure. The moment it bounced down, you say, okay, great, it's pulling back. Well, it pulled back, put a new low, a new lower high, right? And shifted back down. So now my stop loss moves slightly down. You can use whatever discretion you want to say, I want it tighter or looser. Do I want to leave it here? But do not leave your stop loss here. You got all this price movement. Why leave all that on the table? Lock in something, right? Lock in something. Let's see, get a couple more candles. Let's see what happens, right? Boom. Price is doing what? Shifting up, right? Boom. Let's see. Oh, we out the game. What happened? Right? Price was going down. Boom. Boom. But what happened? Price made it a change. They got their life together. Change happened here. It did not come back and retest the lows. So did you have to wait this long to get out? No. Could you got out somewhere sooner? Yes. The moment you seen they did not come back and respect the lows here, right? The moment they did not come back to this level, they did not revisit this level, they chose to go up higher. That was letting you know, hey, the gig is up. and they pushing up higher. Well, I definitely don't want to be around this. You want to get out. So these are certain key things that you want to keep in mind when you're looking at the market, you're trading the market. Are they retesting lows? Are they breaking, making new lows? Is it still following market structure, or did I get a change somewhere? Where did the change happen? And how fast can I fix this? So we must have these systems in place, right? Figure out where the systems go and fix the problem quickly. Because the longer you let the problem linger, the worse it gets, and it's harder to go back and track this. So that's the reason why you must pay attention to your structure. Mark your highs, you have to. Whatever way you need to do to track this, say, hey, I got an alert at the last swing high. You can just put alert here. You don't even have to put a trend line. You have to do all this other stuff. You can just simply create an alert. The moment you hit that level, I need to get out of Dodge, right? Or you can set alerts to moving averages. Whatever way you want to do it. You can have a trailing moving average. However you want to do it, trail your price. Keep track of it. You don't have to micromanage it, but you want to keep track of it. Once it starts breaking back up, you have a shift. Hey, we have a problem here. It's not behaving like it should. Do I want to keep risking this? No, I do not. I want to simply get out of Dodge and I'll take profit. Okay. So those are the simple key things you want to keep in mind when trading your the market, risk management, managing trades, entries and exits, right? So yeah, keep those things in mind. Always a good thing. And on that, I'm gonna stop the video. I'm gonna stop the recording and let's get to some questions.